There's that horizon function, Jim, on the Bloomberg. You know it. I think it's HRZ or HZ as well, which means yield up, price down, bond portfolio losses. When do you sweat?
Well, I think you can start to be concerned, but I wouldn't start necessarily sweating. I think we still have to look at the Fed for guidance. And so far, what the Fed has told us is that they're going to keep interest rates low for a really, really long time. So the only thing that can really move the only thing that can move bond yields higher is inflation expectations. So if you look at 10-year break-evens right now, they're at about 165 basis points or 1.65%. Real yields have TIPS yields have been going a little bit lower. So I think that's the push. But I think what's really behind this is that I think with the, with the president, coming down with COVID, there's some thoughts that we may get a little bit closer to a stimulus package coming out of Congress, not necessarily before the election, but maybe sooner rather than later. And if we follow what's going on in Europe, the last time that Europe started to spike, it wasn't long before the U.S. started to, start to see some spikes themselves. So we may be a little bit behind them. So that might be some motivation, too, for a stimulus package.
What is your portfolio mechanics right now on duration or maturity? What dynamic on the x-axis do you have of a given bond portfolio?
Yeah, so the way that we are looking at things is that we are long duration. So we have some long duration exposure, but that duration exposure is kind of mixed into high quality investment grade credit mainly. So where we stand is that we do own some government bonds, G3 government bonds for protection and safety, but we also own very high quality investment grade to get some additional yield. So we do think that owning some duration here makes a little bit of sense. But you can also mitigate some of the duration sensitivity to your portfolio by owning a little bit of credit and almost having a bit of a barbell, if you will, to get some income from yield and spread, but also some protection and safety from the duration of high quality bonds.